Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Cruising through the comment section, a lot of good comments here. It says, I read that Kazatomprom and Camco for the next 1 to 2 years are forced to buy uranium on the spot market to fulfill their long-term contract obligations. If spot price skyrockets like now, and it seems to last for the next months, it would have a dramatic impact on their balance sheet. They'll have to buy uranium at much higher prices on the market to sell it for plus or minus $40 to the utilities. Yeah, that's going to absolutely hurt them if they're buying uranium at a higher price than what they're selling it for to the utilities. That is not a good business model, and they have no way, well, both of them, to really bring on supply very quickly from their mines. So it looks like they're caught a little bit in a pickle here of we'll stop producing, we'll buy it off the spot market, but if the spot market goes up, now they're in a crunch for not only just getting and obtaining physical uranium, but also the pricing of it. So yeah, that's a huge problem. I don't own either one of those companies, so I'm indifferent to it. But yeah, those who own it, I don't know. They might have some problems. Might be losing some money. It says, do you think oil and gas producers are the best place to be? I'm comparing the ETFs, XOP, all those ETFs. And what I see is that OIH and FCG has much more upside, over 2,000%, than XOP has about 800. So do you think oil services will perform as good as before? I'm not exactly sure what drives those companies. If we're at peak oil, I would think that the oil service companies would actually not do as well, because you're not going to be able to. It depends how we go about this. If they're just going to drill and drill and drill and drill, then yes, the service companies would do very well. I do think the oil service companies will do well. I like the exploration production companies only because the small ones, because if they can grow their production and the oil price were to rocket higher, they can take advantage of the higher prices. So I've put a little bit more money in some of the more exploration focused and smaller companies that have a lot of debt because they were pushed down so much to the downside. So I was buying those types of companies in the market pullback. I've been avoiding the larger big companies. Doesn't mean I'm right, but the Exxon Mobils, the ConocoPhillips, the Chevrons, a lot of those companies are confused on what company they actually are. And they're getting a lot of pressure from countries, investors, like large investors, for ESG, for going into renewables, XYZ. It doesn't really matter. They don't know who they are. And I want to invest in an oil company for the oil it produces, not into an energy company. I want small, specific, we'll call it niche, that I want to be exposed to. It says, hey Andy, what are your thoughts on iron ore mining companies? Prices have fallen drastically. What I would do is I would wait for iron to bottom out. I'd wait for it to come back up, and then I would start looking at those companies. I'm pretty patient here, so that's what I would do. But I would not try catching a falling knife. Don't try catching something that's coming on the way down. Wait for it to bottom and come back up a little bit. Kind of like lumber. Lumber was coming on down. It's like, just wait for it to bottom, wait for it to come back, start to come back up and strengthen. I think lumber looks good. Iron ore is still continuing to fall, so I would do nothing at the moment. I'd wait for it to bottom and turn. Then I would buy into that strength after it turns. It says, how can inventory for real estate go up if commodities go up? Won't it be much more expensive to build? Yes, it's going to be much more expensive to build, and it's going to push real estate even higher. Under an inflationary period, you're going to see both of them go up. Real estate could go up a lot. And I don't think people look at it as the 70s, not anything in between. Just go to the 70s and look at what home prices did. It was one of the largest home expansion phases and booms especially in prices as well. Prices in some areas went up massively. I'm talking massively, 700% type moves. And I'm not calling for that type of move. I don't know what it's going to do, but it could go up dramatically. That's all that I'm trying to get at. Inventories are incredibly low, active listing counts. And remember, there's seasonality with real estate. It just doesn't go straight up. Nothing goes straight up. So when people look at this, and let's say we have a little bit more inventory, let's say the home prices go down a little bit because of seasonality, they usually dip and bottom sometime in January, February of probably 2022. People are going to be calling tops. They're going to be like, it's a top, it's this. Guys, it's seasonality. You have to have prices go down for 2 years before you can really say that you have a top. We don't have any inventory. Prices are going up. The projections for my area for prices next year going up is like 13 or 14%. That's massive. And I would guess that a lot of areas in the United States are going to go up double digits, 10% or greater. And there's probably going to be some areas that don't. But this stuff is slow moving. The time frames aren't as fast as what people think. It's not like 1 month goes down and then all of a sudden it's a top. It doesn't work that way. It's not very fast. You have to get your time frame right. Says Andy, are you a fan buyer of Impala Platinum? Honestly, guys, I'm really a fan of the physical metal. And the reason I'm a fan of the physical metal is when this stuff gets incredibly scarce, you own what everybody wants. If you're in some of these companies, a lot of them are in South Africa. What if something happens there? And that's probably where it's going to happen. And Impala Platinum has a major problem. You're going to have this massive platinum bull market, and they're the reason or the cause of the problem. And I'm not saying that necessarily that company will be, but South Africa, there's a lot of risks there. Electricity risks and all that. And I just don't want to be part of it. I don't want the risk. I'd rather just take a bunch of physical metal, do whatever. I mean, if there was royalty companies, which there isn't on platinum that I know of, I would do a royalty company because then you're diversified and you get all these royalties. But I've really been going more towards the royalty camp. I've been very open about me being heavily invested in royalties. I don't have as much in the miners. I do have some, it's just not a ton. So I like the physical metals, which is a good portion of my net worth. Physical metals. And the reason I do that is because of risk. I don't want the risk. I don't want the risk of taxes. I don't want the risk of all these other things. You can kind of be off the grid. And that's what I like about it. That's what makes it the most private investment that you can possibly make. Cryptos is the worst because it's the most, everyone can see it. You've got a ledger that everyone can see. Hey, look all the transactions that this person's doing. I don't want that. I want to be private. I want to be off the grid. But that's me. Says how come I think things are going to start getting bad? I think stores better have tight security because when people can't afford to feed their families, things might get ugly. Luckily, 3 best and surprising easy ways to double or hold your funds in this 2021 economy: physical silver, gold. Who can guess the third? Better not be crypto. It's better be physical platinum. So I talked a lot about who will perform the best during the uranium bull market. It seems like everyone's got their picks. They've got their preferences on who they like. There was a post that someone had posted that was a pretty long post that was pretty good, and they were talking about producing and those getting a higher valuation for being closer to producer. It was Paladin Energy, Boss Energy, and those types, and that they could be the ones that could first come to the market and produce. And guys, I don't know if that's a benefit or not to be a first producer. I don't know. I mean, people on the internet, they all think that. If they all think that, then they all bought those companies. If they all bought those companies, they are the worst value because they're all sitting in those companies. If it is, and maybe they're not, but I'm just throwing out some logic here and it may not be 100% fact, but you're paying the most for those companies. They have the least value if the most people piled into it. If that makes sense. And you can see it on a dollars per pound basis. Now, when you start to produce, what you're doing is you're producing the value that the very thing that gives the company value. And what if they are producing, they get in long-term contracts, and what if they're some of the first ones to do it? Being first may get into contracts at the lowest price. Maybe, maybe not. I don't know. Or maybe that can snowball them where they get cash and they can start buying other companies or doing stuff because they have the cash. Maybe that's the benefit. And it very well could be. Maybe that's the viewpoint that people are having, is they can get in, they can produce, and they can have cash to expand or buy out other companies or do whatever. I think a sweet spot is a company that's sitting there waiting. They have a project that they can do. They have to build it. They're technically good. Like the company's very good at building these things. They've done it before, like a Deep Yellow, an Encore Energy. Those are the ones that I really like because you're paying nothing for them. If they build whatever they're going to build, and that's what they're good at doing, is building these things, adding value to shareholders, then you get to be revalued. All those pounds of the ground get revalued higher. And if it's in an increasing uranium environment, physical uranium environment where that's going up, you're going to get repriced higher against those pounds. So you're going to get a twofold increase. The other ones, if they're already at a producer level, basically, and you're paying a premium for it, you're not getting revalued again. You're only getting the one valuation of the uranium going up. But there's other benefits of being a producer and getting cash and using that cash to deploy. But I don't know which one's going to be better. I would think that it's going to be one of these companies that is right there. They're 3-4 years away from producing, or 5, or whatever it is. We've got a uranium price that's moving up. People are viewing the sector more positively. Sentiment's changing. They're going to pay a higher premium for those ones that way. They had a super low premium at the bottom. So they're looking at the companies more favorably. Sentiment is changing and the premium's going up, and the company can add value to the shareholders as it builds a project. That is, like, I would think, be the best scenario. And that's what was the best last time. That was Paladin Energy with John Borshoff. If John Borshoff knows how to do it and he's got a company that's similar, Deep Yellow, why would I not take that bet? Because if he pulls it off, he's going to add all this value. And I don't think this is going to be So there's another thing that we're basically speculating on, is what does this curve look like when it goes up and comes down, right? Is this going to come up and stay high for a while? Is it going to come up, come down, and then come back up later on? With the supply-demand market balance being in deficits out in the future, I think we are going to have an elevated uranium price longer than what most people think. My viewpoint would be that these small companies that have to basically go into production to produce, to meet a demand, that they're going to have a chance to do it. It's not going to just come up and come back down. It might in the beginning with the financial sprott kind of boom and bust, but I think it'll come back up and remain elevated and high for these producers to produce. If the majority of these companies are able to produce, that means that the value can be transferred to the shareholders when they build their projects. And if people need the uranium, if they really, really need it, I think that they're going to be able to get funding. So my viewpoint is, I think they're going to get funding. I don't think some of these big projects that require a lot of money are just going to go and not get the money at all. I think they'll get it. I think that the nuclear plants that are being built, that there's probably a lot of money on that side, and that they're going to help finance some of the build out of the uranium if they need it. They're not going to put in multi-billions of dollars to build all this and then not be able to source uranium for it. That's my viewpoint. So I think Bannerman, I think some of these larger companies are going to get the money to do it. Another thing that we were talking about, as I said, I'd rather own Next Gen Energy versus Paladin, who is Paladin's closer to producer. Basically, they'll just have to restart their stuff. Next Gen Energy is going to be probably the largest mine in the uranium space. Like, that's going to be the premier mine. It's going to be the easiest to mine by a long shot. It's got high grades. I mean, that's like the creme de la creme. Like, that is the best mine that could potentially be in the world. And you're comparing it to Paladin, who's close to being production. I think that I would rather take the bet on the premium mine, where they can mine this stuff for $15 a pound and make and produce 30 million pounds a year and make a bunch of money. I mean, I would be willing to take that bet, and that's what I did. And maybe I'm wrong. Maybe you guys are right, and maybe Boss Energy and Paladin are going to be the best performers because they're close to production and they'll be the first to produce, and that's okay. But I'm going after what I think are probably going to be the best mines in the world, or the best value in the world. And I'm going to be a little bit different than probably most people. I'm not going to do what the internet wants me to do. There are some good companies that I think people could get potential good returns on, but like to me, Encore Energy and Deep Yellow have very good value because they're cheaply priced, and their management teams and technical teams can do some amazing stuff to create shareholder value. And they're out there acquiring this stuff at bottoms. So I see that as a smart move. So I want to align myself with Encore Energy and Deep Yellow and Bannerman and all these ones that, everyone's making these excuses of why they can't raise capital. And my take is, I think they can get it. It's maybe not right now, but I think eventually, when the price goes up and everybody's piling money into this sector, I think sentiment's going to change. And that sentiment change is going to be what gives value to the shareholders. They're going to get higher premiums for their pounds in the ground. And some of the ones that are already priced very highly, people are already in it. You have to go to the stuff that people aren't in. But again, guys, I don't know what's going to be the best performers. What I've been doing has worked quite well. We'll see if it continues. Maybe I'm just been lucky. So I wanted to talk about that. I hope to keep this channel going for the entire bull run. Let's hope that is the case. Coming through here, another awesome video. What are some natural gas stocks that you like? Well, I like SM Energy and CDEV. Those are the two that I like. They're oil and natural gas. Comstock Resources, that one was down quite a bit. I like that one. Antero Resources, AR, Southwestern Energy, SWN. Those are some. Crew Energy, that would be CWEGF. Birch Cliff, there's a bunch. Looking down here, what do you think of Elevate Uranium? I don't know anything about Elevate Uranium. I heard it is an internet favorite. I can tell you that. So if I bet you a whole bunch of money is going to get thrown at it as uranium goes up. Because if it's an internet favorite, that means people are going to pile money into it. It means its money flows. So yeah, I'll stop it there. But looks like, uranium could pull back here. I think commodities in general could pull back this week. And look for stronger dollar is going to be one of the main culprits. We could also be seeing the S&P 500 kind of roll over as well. And we've speculated on how that looks. And I don't know what that's going to look like. I think if the S&P rolls over and starts coming down and has a pullback, I think that it may impact our commodities in the beginning, and then they'll separate at some point. I don't know what that separation is going to look like, but eventually money will start flowing into commodities more so than stocks like the S&P 500 and NASDAQ and stuff like that. So that's my guess. If you guys like this content, continue to put comments down in the comment section. Love reading your guys' comments. Give me a thumbs up for the content. And thanks for listening. This is Finding Value.